There are two economies, the global economy, which we can't control, and our personal economy that we can control. In this episode, I'll take you through 10 deals that we've recently done. I've posted in my Facebook group in the month of May. People taking control of their financial future. I'll teach you why they bought them, where they bought them, and how you can replicate them for yourself, with or without me, and thank yourself in 10 years, 20 years, 30 years that you acted now. Now, all these property deals have been shared on my Facebook group with more than 30,000 members. All the clients have been tagged, so they're verifiable. I can't make stuff up when people are tagged and there's 30,000 people to verify and vet them. By the way, these are not plucked randomly for being the cream of the crop. These are the average types of properties that clients are buying right now. 10 property investment deals. Number one, 3 properties in 14 months. Okay, this is the latest 6.7% yield, bought $18,000 below fair market value. What that means is that based on comparable sales on the suburb and the street, if these types of properties have been sold for $430 and we're buying at $412, then that means it's $18,000 below what it ought to go for and is consistently going for even after this deal. This pocket of Perth is yet to be discovered by buyers agents in the herd. It's sort of in the northeast side of Perth, and really we want to be ahead of the game because there's 2 million property investors in Australia, there's thousands of buyers agents, and they all kind of just follow each other, right? We want to be a little bit different and be ahead of the pack. This one is a brick and tile solid home with bonus depreciation benefits. Anyone that tries to sell you a property on the premise of depreciation alone, you should run away from, because depreciation is always a bonus. Like if you lose your job, depreciation doesn't have any benefit. If you sell a property, you need to give some of that depreciation benefit back to the ATO. They don't say that to you, okay? So this is only a bonus. A 422 property. This is by Vipul, okay? So he's bought his first principal place of residence, which I shared many months back, and he used data to buy it, okay? Emotion plus data. Because that grew so much, he's able to extract equity twice and buy 2 investment properties. So he's been strategic even in the place that he chose to live. Okay, he's bought this one for $412,000. Total funds required was less than $80,000. Rent per week is $530, so it basically pays for itself. Very high cash flow. The vacancy rate's almost non-existent. It's built in 1996, which is where the depreciation comes from. And the block size is 650 square meters. We want to try to stick above 500 to 550 at least. He's bought this in Perth from Sydney. Okay, so he's done all this interstate, and people are like, oh, how you do it interstate? Don't you need a buyer's agent for that? No, you don't. You just look a property manager that does the street and property level analysis for you once you've used data to isolate the suburb, and then you use a building and pest inspector to make sure house is in good order. That double whammy forgoes the need for any buyer's agent, and also $15,000, because these two things don't really cost anything much at all. No flights required in that case, and all the due diligence was done, like I said, and he's doing this rinsing and repeating. Like I said, he's bought 3 properties now, 1 for himself, 2 investment properties, and he's building passive income month after month. Okay, there's so much misinformation out there, whether it's on YouTube, podcasts, Facebook forums, property chat. You know, some people are saying this, some people are saying another thing, and they're all just spewing their opinions. There's no data to actually back up what they're saying. Don't be misled in that train of misinformation. Get properties like this. This is the one here. Okay, beautiful brick property. You can't really fault it. The second deal out of 10, 4 properties in 18 months across 3 states. The latest is a 6.2% yield growth machine. Okay, when I say growing by thousands each month, like it literally is growing by thousands each month. Not by 20, 30,000 each month, but 5 to 10,000. Okay, and with the power of leverage, that means that if you're putting in, let's say $90,000 to buy this property, in 1 or 2 years, you've got that money back, and everything else in the future is just cream. 422, great depreciation bonus, and he's bought 4 times, has Adarsh, without a buyer's agent. So that's mean 15,000 times 4, $60,000 saved. That is the power of self-education. And he's not bought any inferior than he would have through a buyer's agent. In fact, I reckon he's bought much, much superior. $460,000 purchase price, rent is 550. Fantastic data. What data? What data do I mean? I mean things like building approvals, like inventory levels, like stock on market, like job advertisements, SA3 data. There's 30 to 35 data factors that some of it looks at microeconomics, some of it looks at macroeconomics, some of it implies what will happen to the property in suburb in the short term, some of it looks at the long term. There's a matrix and it's teachable, okay? And if you learn this like Ardash has, then you can get properties like this with low vacancy rates, low maintenance brick, big land quotient, Perth from Sydney, buying Interstate. Here it is right here. A little bit scruffy around the edges, a little bit of gardening required, I reckon, but super nice anyway. The third property, I know you're going to say this is not a true result, you're making this up, but let me go for it anyway. $101,000 or 18% capital growth in 3 months by Akib Khan. Like I've tagged him, you can go DM him, check it out. Okay, he's basically made himself another 1.5 deposits at least in 3 months. 100% return on investment based on the funds required. That's the power of leverage. Try to get 100% return on investment in the stock market consistently. Like, I dare you. I don't think you can do it. All right, to be honest, you can't really do it in property consistently either. This is just a really fantastic deal. But this is not based on some loose comparables, some fluffy numbers. This is actually based on a bank valuation from CBA. Newly renovated, elevated block. You know, when there's a street and one side a little bit higher, one side a little bit depressed, always buy on the higher side, okay? That's going to bode well for the future capital growth of the property. And try to buy in a quiet street like a cul-de-sac, brick and tile, beautiful 422 home. Like I said, $565,000 purchase price, bank revaluation CBA at 666 3 months after settlement, and required no more than 110,000. So I'm not promising anything here, guys, but if you have $100,000 in your bank, you could potentially, double it using, data-led property investing in very quick time. I'm not always going to say 3 months, but that was the case in this example. Okay, he really followed data to the T. Huge block, almost 800 square meters, Perth from Sydney, where Akib lives. This is the property right here. Really nice, right? I mean, it's nondescript. What can you say? Fourth property. This is a really rare find, and it's a cute cottage. Its yield 6.9%, perfect for the local demographic. So some people will say, hey, look, this is a really small property, PK. Like, I thought you were all about like buying big blocks of land. It's all about reverse engineering what the local demographic in your suburb wants. Like, if your local demographic can't afford in that suburb big blocks of land or expensive properties, then buy something like this, established high land to asset ratio. That is the most important thing. Now, don't get confused with saying, okay, PK said that land value is not always important. Don't get confused with saying, okay, I'll buy out past Schofields or past Tarnee in Melbourne or Sydney respectively, a brand new property on 250, 300 square meters. No, this is different. The land to asset ratio is really high on this one. That means you're mostly paying for the land, unlike those brand new cookie cutter properties in Western Melbourne, Western Sydney. Of course, in the short term, you'll say, oh, but PK, those have grown so much in the last 2 or 3 years. What are you talking about? These principles, fundamentals that I'm teaching, they last the test of time. They eventuate or transpire over the long term. We can have short-term booms and busts, but over the long term, 5, 10, 15 years, these principles like land to asset ratio, they will make you wealthy. Don't make a long-term decision based on short-term emotion or short-term suggestion from what a friend has done and made money in the short term. Stick to the principles that are tried and tested, and that's exactly what Elizabeth has done really, really well. Extremely low maintenance property, set and forget. She needed no more than 70,000 to get into this one, 360,000 purchase price, and the rent is 480. And this was her first interstate purchase. She was like a little bit nervous about buying interstate. It's like, it is a nervous thing. I haven't been to the property, what if something happens? But through the processes of property investing, like how to do your due diligence interstate, how to use a property manager, how to actually make sure that the order of the property, the bones are strong, it's not going to fall over, it's going to get a really good tenant, it makes sure that it's not going to get trashed. All these things can be mitigated and then some using education. People always want to know, where did you buy, what's the next hotspot? I always argue that the how to buy is as important as where to buy, and that's exactly what Elizabeth has invested in and done tremendously well. Number 5 properties, And this is the latest one, 6.2% yield stunner bought in an SMSF. So Eddie, tremendous guy, has recently got married, really nice bloke and family. He's bought 4 properties already, and this is now bought in his SMSF. He strategically bought it in such as entity structure to keep building assets because he's got the property bug. He knows that wealth is built through owning multiple assets. Like just a few years ago, my portfolio value was, just over 5 million, and now it's 12 million. People are like, how did that happen? Like just in a few years. No credit to myself. It's just buying multiple assets, and every time you hold it and there's a mini boom or a suburb boom or a national boom, it goes up. And in another 10 years, imagine what it will become 20 years. So get in now so you give yourself the most opportunity to build wealth, just like Eddie is doing. In an SMSF, you want to buy something that's really low maintenance because there's not an ability to do big renovations, developments in an SMSF due to regulatory reasons. So you want something that's just really set and forget. And that's really how he's done it and played the SMS game. He's bought really well, 440,000, needed less than 100,000 to get in. Rent per week is 525. Vacancy is 0.51. He lives in Sydney. He's bought in Perth. He's diversified already across various other states. And let's be honest, like data does not lie. It does. I could lie. You could lie. Other people could lie. But numbers don't lie because they're cold, they're hard, they're objective. They don't care. And if you can lean and rely on numbers, not your interpretation, not my interpretation of numbers, but statistical, reliable interpretation based on math, then you can be sure that you're going to make a good decision. That is what is important. Here's the property, really beautiful. I wouldn't mind living here myself, and I think my son would love the trampoline and basketball court. Looks a bit like our house, actually. The next property, number 6, 7.3% yield, future cash cow in a beautifully located, growing suburb at the bottom of its long-term cycle. I'm going to give this one away. This is in Cairns, okay? I could talk so much about Cairns. Maybe I'll do another deep dive on Cairns. Of course, don't just buy anywhere in Cairns, good pockets, bad pockets. But I want to say buy in an area that hasn't already grown too much. People are like buying in Adelaide still. People are buying in like parts of North Brisbane still. People are, like, why are you buying at the top of the cycle? People are still buying in regional Victoria. It's like, guys, that ship has sailed. Be ahead of the curve. Don't follow the news. Don't follow your friends. Don't follow your family members. Don't follow, what people are talking about on Facebook groups because they did well by buying in a location a year ago. Be ahead of the curve, at the cutting edge. That is how to make money, not by following others, because most people don't do things right. So don't do the Pied Piper trap. This is a big block, big demand, bonus depreciation, tax benefits, a landlocked suburb. This is really important. People will always like buy cheap, affordable houses in fringe parts of regional areas or fringe parts of capital cities where there's so much land, and then they wonder why it didn't grow the way that they expected it to grow. You want to buy in infill areas, or at least where council is not going to release new land or rezone things from farmlands to residential. Really, really important to understand the supply side. And it's really not hard. Like, I know you're lacking confidence perhaps. It's really not hard. You don't need to pay $15,000 for something you can do in 2 minutes. You just need to build the confidence to be able to know how to do it. And that's exactly what Vinay has done. Bought for $430,000, needed less than $80,000 to get in. Rent is $600 a week. Tremendous data both on the supply side and the demand side. When it comes to data, we look at things short-term, long-term, micro, macro. It's very important to get an overall picture, not just go off one ratio or not just go off one data metric. It's important to paint a picture. Data is multi-dimensional. You need to learn to understand it from various angles of vision. Hypothesis, antithesis, and synthesis is very, very important. Vacancy rates very low. Huge block size. Bought in Queensland, like I said, from Melbourne. And the science of property investing is easily learnable quickly. It doesn't take a part-time job. It's not something you can't do with a couple of kids and 2 jobs, husband and wife. Anyone can do this. I know the buyer's agents kind of make it out, oh, look, I've been in the field for 10 years. There's no way you can replicate these relationships. There's no way you can get better deals, negotiate better than I can. It's all BS. It's all marketing. be brave to look through it. I don't care if you do my course or not, but be brave to look through the marketing of people who, quite frankly, are lacking ethics. Here's the property. I told you it was Cairns because you can't hide it. Those beautiful mountains in the southern corridor. Really can't go past it. I've got there myself once as well. 2 properties in 3 months. Latest clean, 6.3% yield, Queensland growth asset, completely renovated, low maintenance, high cash flow, resistant to further rates. So, I mean, I'm still hearing people buying properties like 4.5% yield, and I'm like, why? Like, why are you doing that? Like, it's going to be negatively geared, and even rents go up and interest rates come down. It's still not going to be hugely cash flow. Buy something that you can continue holding on to, even if you lose your job for 6 months, 12 months. Okay, that is advanced property investing, not just making money, but making sure you don't lose money on the downside risk. Okay, high demand. He locked in rental applications before settlement. So in the special conditions box in your contract, you can actually put in words to the effect like, I want to be able to advertise the property before settlement. I want to be able to use the selling agent's pictures so I can advertise, put a for lease sign out on the front lawn. You can put this stuff in a contract, and so that when you do exchange keys at settlement, you've already locked in a tenant. That's exactly what Joel did. He's a young guy, whether you start at 20, 30, 40, maybe 50, maybe even 60s, make sure you start. The currency for success is not whether you do my course or not, is not whether you use a buyer's agent or not. The currency for success is action. And the sooner you start, the better you'll do. Time in the market is really important. So is timing the market. You need to get both of them really good. $30,000 saved not using a buyer's agent is a big deal for a young fellow. And that's exactly what he's done. It's a big deal for anyone. I'll share with you someone who's saved way more than that in a second. 367 purchase price, total funds required less than 65, rent 450, and he's done tremendously well. He's not given the keys to his financial future to someone else. Like, oh, it's too hard. I'm just going to trust this person. Hopefully it works out. No one ever got rich from just outsourcing their wealth creation for every single type of asset. Okay, don't become dependent on a property company for every single property purchase. Don't pay a buyer's agent $15,000 just to do what you could do right now, or go on Domain and Real Estate or build some relationships with agents and get properties. Don't pay them for basically no work, okay? Don't be fooled into buying an ineffective $2,000 to $3,000 course from a buyer's agent that upsells you to their full service, either on YouTube, Facebook. There's all these ads these days. Oh, hey, buy this course, buy this course. They teach you what to do, but not how to do it. They give you the carrot on the stick, but when you struggle and suffer and become frustrated because you never get taught how to do it, then, they expect you, and you do go to them and say, oh, look, it was really hard. I need you to do it for me. And cha-ching, that's when they make the $15,000. Don't fall for cheap, basic, elementary courses, $500, $1,000 like that. You can get all that stuff for free anyway on podcasts and YouTube. And don't fall for the bait and switch method is what I'm saying. No one cares about your money as much as you do. Not me, okay? Maybe you don't even care because you have a mindset issue. You don't believe that your personal economy is different from the global economy. Maybe you don't even care about your money, but try to invest in your personal economy so that you do get the education and inspiration to be able to thank yourself in 10, 20 years time that you did something now. Okay, here's the property right here. Beautiful, clean, set and forget, not much to do there. 7.8% yield deal in a capital city, rising suburb. Don't FOMO when you look at something like this, but these won't last forever. Like, just think about it. 8%, okay? 8% in a capital city, 20 Ks from Perth CBD. Do you honestly think that you'll be able to get these deals in a year's time? Like, do you honestly think that in 2 years' time, 5 years' time, in any capital city, you'll be able to get something under 500K with an 8% yield? Like, just ask yourself the question, and if the answer is no, then the time to take action is now. He's bought this with an existing granny flat. Now, I'm not a big fan of building granny flats at a property accumulation stage when you're first starting your portfolio because it's an inefficient use of capital. But if it already exists, then why not? And it's costing nothing to hold, even with high interest rates, okay? That's the beauty about it. 750 meters from a top-rated primary school. Sam Qatar and all, DM these guys. They're really nice people. They'll help you. $400,000. $80,000 to get in. Rent per week is $600. Everything is terrific. He's bought this once again in Perth from Sydney. Here's the property, a little bit dark, but dark is good. Okay, ninth property. These are the best ones, okay? 5 properties in 12 months. The latest is 6.3% yield, making money on the way in. What does that mean, making money on the way in? What it means is he's bought $59,000 below fair market value. And it's like, oh, did you just make that up? Well, no, there was an identical property on the same street, identical configuration, age, bedrooms, land size, etc., sold for $449,000. He bought this, Sham did, for $390,000. So, don't take my word for it. You can DM him. He lives in Wagga, super nice guy, and he's making money on the way in. So he required only $70,000 to get into this property, and he's already made, on the way in, not even 1 month, he's made 60. So almost 100% return on investment instantly. I can't take any credit. I wasn't buying properties like this when I started, but these people are, because they're far more educated than I ever was. Recently renovated, new floors, bathroom, kitchen, 12Ks from Perth. 12Ks, okay? Under 400,000, 12Ks from Perth CBD. And he's bought 5 times now without a buyer's agent. 5 times 15 equals 75. That's the reason he's been able to get to his 5th property, because he hasn't sacrificed a whole deposit in just buyer's agent fees. And it's not like he's got inferior properties versus buyer's agent. These are much better properties, and also without a buyer's agent. So how sometimes buyer's agents are like, oh, don't you think it's worth it if we save you $15,000 in negotiation to pay us $15,000? If we save you $30,000 in negotiation to pay us $15,000, you're like, oh yeah, that does make sense. But why not do that yourself? You can save yourself $30,000 in negotiation by education, and also the $15,000 in buyer's agent fees. So that logic doesn't quite hold up in their marketing spiels. $390,000, less than 70 required, $470 rent, 0.13 vacancy rate, 701 square meters block of land, brick, bought in Perth from Wagga. He's already diversified all over Australia. Beautiful properties. Palm trees can be a little bit of a nightmare, a little bit of a headache to maintain sometimes. I've got some palm trees in front of my house as well, but if you keep on top of them, it's great. It's a beautiful, well-structured, solid brick home. And this is the last one, 6 properties in 16 months. Okay, just wrap your head around that. The latest of the 6.8% yield off market stunner. Okay, the thing about this is Ray has bought the last 4 properties using equity from the first 2. So what that means is that the first 2 properties have grown so much that you'll be able to harvest that equity, refinance, and buy more properties. People are like, oh, just buy blue chip Sydney, Melbourne, Brisbane. If he had done this 16 months ago, then he would have been in negative equity right now. Blue chip is not always blue chip. Blue chip doesn't even matter. I don't even know what the word means. Okay, make sure you prioritize short-term growth, not just what will happen in 30 years' time because you're 5 kilometers from the CBD in Melbourne or Brisbane buying a $1.5 million property that costs $20,000 to hold. True portfolio wealth is created through compounding, and compounding works best when you get short-term results. That doesn't mean we want buying an area that's going to be crash in the 10 or 20-year period. We want that long-term growth as well. But these areas do no worse than Brisbane, Sydney, Melbourne. In fact, all property in Australia basically performs the same over a 30-year period. This is what these boomer buyers agents don't want you to know. They try to sell you properties negatively geared in capital cities. Safe and secure 18-month lease in place. And he really had to do a mindset shift. Like when he emailed me about this deal, and I only know about these deals because clients email me. They buy for themselves, buy themselves using my assistance. He emailed me and he told me, hey, PK, 16 months ago, I didn't even want to take a loan. I was so risk averse. It just wasn't my culture or my lifestyle or my inclination to get a loan. Fast forward 16 months, he shifted that mindset, got a ton of good debt, but has also become someone with hundreds of thousands of dollars in equity. And fast forward 3 or 4 years, he's going to become a multimillionaire. There's no doubt about it with this kind of asset value. So this is the key to your financial future. Buying good assets with good debt, with big equity, good cash flow that you can afford to hold in the long term, and then just let time do its thing. It's passive, low maintenance on the side. He's bought 6 times without a buyer's agent. That's $90,000 saved. That is how he's been able to get to 6 properties in such a short period of time. Otherwise, he'd be capped out at maybe 3 or 4. Okay, and I haven't tagged Ray because he's a bit of a private person, but clients, and I know that hundreds of you will be watching, you can DM him in our private community forum, the client-only forum that's away from Facebook on our own native platform, and he's more than happy to help within there if you're curious about how, where, or why he bought this property. But it's $483,000, $90,000 to get in. Rent per week is $630, and yeah, it's just great. It says Perth once again, and here's the property here. Sometimes you see properties on the outside like this and you're like, oh, I'm a bit old, not sure if it's a little bit trashy on the inside, but check this one out. It's like beautiful, beautiful low maintenance property with good depreciation benefits. So guys, we don't rise to the level of our goals, but we fall to a level of our systems, okay? We fall to the level of our systems regardless of our hopes and dreams. So if you have a system to get these types of results, these deals, and really allow yourself to become financially free, then like just switch this off. You don't need me, honestly, you don't need anyone. Just go do what you're doing. Don't overthink it. Don't get into analysis paralysis mode. But if you do need a system or you don't know how to do it, once again, like I'm not trying to sell you my course. Honestly, don't care if you do it or not. I'm like beyond that now. It's inconsequential. Try to do it yourself perhaps, but if you do need assistance, I'm happy to help. But first of all, at least use free education, level up, invest not in real estate, but in first of all, the 6 inches between your 2 ears, because that real estate is far more valuable. And to do that, I'll leave links below to my Facebook group with more than 30,000 amazing members, Australian Property Mastery with PK, and also my podcast on Apple, Spotify, and Google, Australian Property Mastery with PK. I'll leave links below. And by those resources, you should be able to really, really level up and see for yourself, hey, can I get these results? Because over a 10, 20, 30 year period, if you're spending $500,000 on properties, even the smallest mistakes can cost you tens, if not hundreds of thousands of dollars now, and through the power of lost opportunity cost and compounding. So really think about that. You can't control what's going on in the global economy, but you can control what's going on in your personal economy. Take control of that economy. You're the RBA governor of that economy. You're the prime minister of that economy. You're the CEO of your personal economy. Invest in yourself and thank yourself in 10, 20, 30 years that you took action now. Subscribe, give it a like, leave a comment. Thank you for allowing me to serve you. I'll see you next month when I'll just keep giving more and more deals. See you later.